Hey guys, welcome back. So today in this video we're going to talk about pin bar and engulfing candlesticks, and also we're gonna go into the in-depth analysis of pin bar, like what it means to spot a pin bar and what it indicates. Okay, and after that we're also going to go into how you can analyze what's inside a pin bar without going into lower time frames, and in a similar way at a lower time frame how you can spot a pin bar without going into higher time frames. Okay, and in the end we're gonna go over an example on the chart so that you can understand pin bar really better. So make sure to subscribe our channel so that you don't miss out on any of our upcoming videos. And without any further ado, let's get started. So the first thing is, what is pin bar? Now pin bar candle can be spotted anywhere on the charts whenever you see a candle which has a very long wick, okay, and very small body. The pin bar can either be a bullish pin bar or a bearish pin bar. This one is bearish pin bar because the body, the very small body, is at the bottom of the whole candle, and there's a very long wick at the top. So basically, this pin bar was formed because of the price of opening up here and then it going up, and after that from here it went down, and then here it came here to close. So what pin bar actually shows is the price rejection. So here you can see the price opened up here and it went bullish, and the bulls were in control. So it started going upward, and when it reached here, the bears took control, and it started going bearish, which is basically that the price started getting rejected. So the bears took this from here and dropped it all the way to here, okay, and then in the end what happened is it closed at this level. So this is basically showing us a strong price rejection. So you have to look for pin bar near the key levels. The key levels can either be support or resistance, and or supply or demand, and pin bar indicates a trend reversal. So whenever you spot a pin bar, it is basically indicating a trend reversal because the price is getting rejected and the trend is going to be rejected, okay, and the trend is going to be reversed. And now let's discuss about the engulfing candlestick. In here you can see this is basically a bearish engulfing candle because this bullish candle is being totally engulfed by this bearish candle. So here our price opened up here and then it went down a little bit and came back to form this wick, and then it started going upward in the bullish direction, and after reaching this high it closed at this level. It came back and closed at this level and formed this wick at the top. So this is basically a bullish candle, and this one is basically a bearish candle because it opened up here, okay, it went up to this high and then started going downward and reached this low and then moved slightly upward to close here. So this is basically a bearish candle, and this candle is totally engulfing or covering this candle, okay. So this is basically a bearish engulfing candle, and bearish engulfing candle at a lower time frame basically means a bearish pin bar, okay, as we're going to discuss next. So again, a pin bar basically represents a strong price rejection, okay, and what it does is whenever it is formed near a key level, it basically tells us about the reversal of the trend. Where this pin bar, the bearish pin bar, is basically showing us the reversal of trend from bullish to bearish, okay, because the bullish trend is getting overwhelmed or reversed by the bearish, and this is a strong price rejection here. So now let's look at this at the 30-minute time frame. So let's say we have spotted a pin bar at 30-minute time frame, and when we move to a smaller time frame, like in 30-minute time frame we have one candle, so in 15-minute time frame we will have two candles, right? So these two candles are basically forming a pin bar at 30-minute time frame, okay, and when we combine these candles, as you can see, this is basically a bull okay, bullish candle, and this is basically a bearish candle. So when we combine these, the area that will be left behind will basically be this area, okay, this area, and this will form a pin bar at 30-minute time frame. And this is basically a bearish engulfing candle, okay, which is indicating that at 15-minute time frame the bearish engulfing candle is forming a pin bar at 30-minute time frame. And when we go further down into this 15-minute time frame, so basically we have two candles at 15-minute time frame. So when we check this at 5-minute time frame, we're gonna have 6 candles, 3 candles for this bullish candle and 3 candles for this bearish candle. Now again, after looking at this 5-minute time frame, we can see that when we combine these, we basically get this candle, okay, this bullish candle, and when we combine these 3 candles, we basically get this bearish candle. And when we combine them all, these 6 of them together, we will basically getting a pin bar at 30-minute time frame. So here you can see how looking at candles and observing candles at smaller time frames can indicate or tell us what will be happening at higher time frames without going towards higher time frames. Okay, so whenever you spot this pattern or this pattern, this basically means that the formation of pin bar at a higher time frame. Okay, now here we can see a single candle, and in the 15-minute time frame we're spotting a pin bar. Okay, but when we go towards this in 5-minute time frame, what we will be basically getting is these 2 candles which are going bullish, okay, and this candle which is going bearish. So when we combine these 3 candles, this will indicate, or this will give us a pin bar at a higher time frame, which is basically our 15-minute time frame. So these 3 candles at 5-minute time frame combine to form a bearish pin bar at 15-minute time frame. So you have to keep in mind that pin bar tells us about the trend reversal, okay, and this is because the price is getting rejected. Here it was going upward, but then it was rejected and the bears pulled the market all down towards this level, okay, and it basically closed here. So this is indicating that the price is getting rejected and trend is going to be reversed. And you have to look for the pin bar near the key levels, okay. The key levels again can either be support or resistance, or supply or demand. Now let's go through an example on the charts so that you can understand it even better. So let me zoom this a little bit, and here we are in the 15-minute time frame, and if you basically look at this, and here we can see that the basically price opened up here, it went a little bit down and formed this wick, then it went all the way up towards being bullish, but here the price got rejected, okay. The price started getting rejected, and the bears pulled the market all down towards this level and formed a pin bar, okay. This is basically the indication of the price rejection, and as you can see the trend got reversed, okay. So basically this is a 15-minute time frame, but if we go towards a smaller time frame that can be 5-minute time frame, we will be seeing engulfing candle, okay. So let me check out. So here you can see these candles. If we combine all these candles, we can basically get a pin bar, because these 2 candles will combine to form a bull, okay, bullish candle, and this bearish candle is basically giving us, and when we combine it with this bearish candle at 5-minute time frame, these 3 candles are basically giving us a pin bar that we can see here on our 15-minute time frame. Okay, let me just go ahead and show you again. So this pin bar is basically formed by 3 candles at 5-minute time frame, in which 2 candles are bullish and 1 candle is bearish, which is basically showing us the price rejection and coming at this level, okay. So here in another example, we can see that this is basically a bearish engulfing candle, and when we go into this into smaller time frame, this we will basically see a bullish 3 bullish candles and 3 bearish candles forming up this engulfing candle. So let me go to 5-minute time frame and show it to you. So let me zoom this. So as you can see here, there are basically 3 bullish candles here and 3 bearish candles, which all combine and form the engulfing candle at a higher time frame. So this is basically a one candle, one bearish candle at 15-minute time frame, and this is basically one bullish candle at 15-minute time frame. And this bullish candle, or these 3 candles, are being engulfed by these 3 candles at a higher time frame. Okay, and this is basically forming a bearish engulfing candle. So you can also see how we can spot engulfing candles at smaller time frame without moving into higher time frame. So this basically shows you how you can spot trends and pin bars and predict the trend reversal using pin bar and the engulfing candles. So I hope you liked this video. If you have any questions, please comment down below, and also please make sure to subscribe to our channel. And you can also visit our website www.forexb.co in order to learn more about price action and forex. See you guys in the next video. Thank you.